set the tone for today. Now, India has been colonized for about 200 years, and it is remarkable how much we've achieved in the last few decades. Our growth has been robust and resilient in the face of many adversities. Thank you so much, Manish sir, for that insightful opening.
Now moving on, in the good old times, probably just a day after you were born, Merlin, we were looking at people, and there is a lot of people who used to have their holdings in materialized form. When I say materialized, I'm talking about something that you can touch and feel, a sort of a certificate. I'm definitely not referring to the certificate that you would receive at the time of your graduation, but I'm talking about the physical share certificates that we used to get back then. I'm sure many of us over here have seen, how many of us have seen the physical share certificates here? If I can get a raise of hands. Thank you so much. Now imagine there's a person who's holding about 100 companies in their portfolio, right? And they have close to about as many shares of that particular company. So you can imagine the volume of the share certificates that they would have. The number of share certificates, how would you store them? Would you need probably a locker? Would you need an almirah? Or do you even need a 1 BHK to share all of them? Which, by the way, in the city that we are in right now, is going to cost a fortune for sure.
Now, Raj, hold on. I'm not sure how far you went, but today looks very different. We've traversed a long way, and these share certificates rarely even exist. They are gone with the winds of change, and in the times of internet and online brokerages, we hold our share in what is called a demat account. But yes, those share certificates are a small example of where we used to be as a country.
Absolutely.
Now, our next speakers will take you back and discuss the era of license Raj. They will discuss actions taken post-liberalization that helped India reach top 5, and our personal favorite, they will discuss India's path towards a 10 trillion economy.
Now, it is no simple task to be the person responsible for selecting the next business which will form a part of your portfolio. He has many gifted minds in his team who come up with many gifted ideas, many gifted suggestions, many gifted recommendations, and he sieves through all of them to come up with the next big recommendation which will form a part of your portfolio. There's not just science at work, but it is an art in itself.
It is a pleasure to bring to you our Chief Investment Officer, Mr. Jaspreet Singh. Now, Jaspreet sir has had leadership stints at Systematics, Anandrati, and Angel Broking, among others, and throughout his 20-year career, he has worked in the areas of investment banking, equity research, and corporate finance. Now, he has successfully built and led teams in the last 2 decades driven by his passion for equity markets. Now, Jaspreet sir will be setting the tone for what his team member and the main speaker for this section have to share with us. She's one of our research analysts who helps up with recommendations for your portfolio. She's a chartered accountant with an experience of 7 years in tax, audit, and equity research. She's also described as an outspoken, jovial, and an enthusiast by her team members. And if you've seen the Metaverse video, she's also a familiar face. Please put your hands together for Lisa Fernandez and Jaspreet Singh.
Yeah, hi. Good morning, namaskar. Welcome, everyone. It's a large gathering. We are assembled after a good 2 years. Great to see so many smiling faces. And thank you for your patience for the last hour that you've shown. Would request the next hour and a half, we continue with the same. After that interesting, detailed, data-led analytical session, let's move on to something a little fun, light, which takes us back in the good old years. Some of us may have been born in that era. It could be our grandfather's era, fathers, and some of it in our era. So we'll do a circle back to how India looked like a couple of decades back. Moving forward to how it was in the post-liberalization era, and how we envisage how it could look like over the next 10 years. So with that, I'm sure the next hour and a half, it's going to be a fun-filled roller coaster ride that we're going to be embarking upon. I'm sure most of us would have been seen some movie in a 4D setup like in an Inox, or I'm sure this one is going to be something very similar. So request you to fasten your seat belts, and no stock recommendations here, right? Some of it it's going to be used more as a analogy rather than stock recommendations. With that, I hand over to our champion, Lisa Fernandez, and I'll come back on stage after an interesting next 35-40 minutes. Over to Lisa.
Thank you for the warm welcome. Hello everyone, and thank you for being here. It's a great pleasure to see you all here. Hope you all are doing fine. So thank you for sparing your time to attend this meet, and in return of your time, I'll be sharing an opportunity with you. Like Jaspreet said, this is not a stock opportunity, so please don't get mistaken. In fact, this opportunity is much, much bigger than the total market cap of all the stocks put together. This opportunity is worth $3 trillion, and its growth journey has been fantastic. Yes, that opportunity is India, and today I am privileged to be taking you through the transformational journey of India and its outlook for the next decade. But before I take you back to the past, before I take you to the future, let me take you back to the past. I know you all must be wondering why I am taking you back. So have you ever seen how a tiger catches its prey? When a tiger wants to catch its prey, it takes few steps backwards to jump longer and perfectly to catch its target. So in a similar manner, even we should take few steps backwards, few generations backwards, back to the history of India to understand the future of India. I would call that the winning leap to the future, India 2030, where India would be roaring like a tiger. So I will be covering my topic in 4 parts. We will see India's past potential, the decisions that were taken post-independence, the actions which were taken post-1991, which led to liberalization of the economy, and lastly, further action taken to reflect the 10 trillion economy going forward. So this is the map of the ancient India, where India comprised of Afghanistan, Pakistan, and Bangladesh. It was called a Sone ki Chidiya. Now, why was it called a Sone ki Chidiya? For that, I move to the next slide. This chart depicts India's share of world GDP over 2,000 years, starting from the 1st century. India is represented by the blue line, and if you observe closely, India's share of GDP was 28%, making it the richest country in the world. But over a period of time, due to foreign invasions, our share of world GDP fell drastically to 4% by independence. Post that, because of the restrictions of the license Raj, our growth continued to get hampered, and today it's at 3%. If you see US, at the turn of the 18th century, because of industrialization and infrastructure development, it zoomed upwards, and today it's right on top. So we cover our first part, the license Raj period, during 1947 to 1991. So if you would ask me to describe license Raj in one picture, I would show this. India being jacquardified or tied up by the zanjeers, shackled by the chains. If you tie up the hands and legs of a person and throw that person in a pool, that person won't be able to swim across, despite being the best swimmer. That was license Raj. The Singapore Prime Minister once quoted that India is a sleeping giant elephant tied to an anchor. What he meant was that India has great potential, but it was tied by the chains of the license Raj. So just imagine our seminar is being conducted during the British Raj, and our founder has invited a British official in our midst. So we at Research and Ranking would have been running to and fro to obtain a license. The license for what? So that you all could sit comfortably like you're seated right now. Yes, something as simple as sitting also required a license during British Raj. So this was the Kursi Nashin, a seat license, where the seat is circled. So it's the holder of the certificate is entitled to the courtesy of a seat when visiting officers and gentlemen. It's given in 1887. So that's what it means by being truly independent. Cut to present. Last year, during COVID, we could have held this meeting over Zoom and the like, but we preferred to hold a physical conference like this because nothing can match a face-to-face interactions, right? You won't be able to see my expressions, I won't be able to see your expressions. Fast forward to 2030. Maybe you would be sitting in Australia, you would be in London, but together we would be under the same roof through the metaverse or any advanced technology that time, represented by our digital avatars. So this is just a glimpse of how we are going to go forward with a balance of Kal, Aaj and Kal. On the left-hand side, there is this newspaper snippet which shows 14 top banks nationalized. This newspaper snippet is way back in 1969 when 14 banks were nationalized. So in the early decades, what was License Raj? License Raj was a set of licenses, rules, regulations, and everything was controlled by the government. Numerous licenses were required to set up a business. There was artificial scarcity, pricing controls, capacity constraints. All that defined the License Raj. So most of the business was carried out by the government. You can see the headlines which says 14 top banks are nationalized. In 1953, the airlines owned by Tata Group was acquired by Air India. Against this backdrop, I would quote what the great Chanakya said. He said, "Jis desh ka raja vyapari hoga, us desh ki janta bhikhari hogi." You all will understand the relevance of this line as I proceed further. So I'll give a few examples of what happened during the License Raj. Starting with a scooter. Scooter was such a prized possession at that time that during the World Cup 1983, the government gifted a scooter to every member of the winning team. Why? Just look at the waiting period. It says 10 to 12 years. You had to wait that much. This is average all over India. In some states it may be 5 years, in some states, but on an average it was 10 to 12 years. For a telephone, the waiting period was 8 to 10 years. Infosys that time in 80s, they lost a client because they couldn't get a telephone connection on time. If you wanted to make a call from Patna to Jabalpur, it took 8 hours you had to wait. To send a letter, you had to wait 5 to 7 days. There was something also called as radio and television license. This is the actual scanned copy of a book. So if you buy a radio TV, you had to compulsorily pay renewal fees. And if you wouldn't, the post office inspector would come to your house and actually seize the TV and radio away. Setting up a business. It took minimum 50 to 100 licenses to set up a business. That means that time if someone had an idea, by the time he could act on it, it used to take 3 to 5 years. So normally entrepreneurs, they set up their business or they go for expansion during boom time. But by the time they would get permission, licenses and all, it would take 3 to 5 years. And if recession would hit, the project would just become non-viable. Today, if you have an idea, you could be in the market in the next 6 to 12 months, producing or servicing whatever you wish to. Transfer of equity shares. It took more than 3 months, if you're lucky that too, because it used to go to the broker, there were signature issues, it was in physical form. And all that, it led to the economy deteriorating. If you see between 1960 to 1980, we have collated the information. India's GDP growth was the lowest among all the developing nations. Even in 1980, it rose, but still it was at the lowest. In 1990, because of the Kuwait-Iraq war, the balance of payments crisis, the balance of payment was hit. It led to a severe balance of payment crisis where imports were much higher than exports. We didn't have Forex reserves. It was just sufficient to cover not even 2 weeks of imports. We didn't have money to pay interest on loan. There was high inflation. So what happened? We had to sell our gold. We had to mortgage our gold. Our Sone ki Chidiya had to actually mortgage 67 tons of gold. It was shipped to Bank of England and Union Bank of Switzerland. India was in deep crisis. The Sone ki Chidiya was lost its wings and it became a flightless bird now. But as they say, when the going gets tough, the tough gets going. India was a tough cookie. The government realized that it had no business to do business. The crisis, so if you have an exam coming up, when do you start studying seriously for it? You start studying when you get the schedule of the exam, right? So in the similar manner, even the schedule, it came in the form of this crisis, and the government had to roll up its sleeves and do something about it, and they called for liberalization. So under the Prime Ministership of P.V. Narasimha Rao and our Finance Minister Dr. Manmohan Singh, they called for liberalization. So in the same way, humans, they grow during difficult period. Companies mature and grow during difficult period, like I should give you this example. Same way, in the equity market, your wealth grows during periods of correction. Use the crisis as an opportunity to create wealth. Because these crashes are temporary, and a good fundamental stock will always tide over it. When the market recovers, it is these stocks that will actually recover. They will be among the first to recover. So yes, I will show you a clip of eminent personalities, and they will be sharing their experiences of what they actually went through the license Raj.
It's not really 91 because what started in 91 was a long process. So I think a shortage economy gave way to an economy in which things became easily available.
I became a member of parliament in 1988, and one of the perks that members of parliament enjoyed where I could recommend somebody to get a telephone. I could recommend somebody to get a LPG connection.
India got its independence in 1947, but it only got its political independence. In 91, only in 1991, it got or began to get its economic independence, and we are still fighting for it, as we are fighting for the reforms.
The first thing that comes to my mind it was the era of shortages. Any phone call emergency will come in to their house and somebody will come from there and call us and say there's a phone call. And of course nobody can wait that long because phone calls are expensive. So there's one call to call you saying that we'll call you again. And about 20 minutes later a second call will come in on which you can talk.
This is a story about a famous media couple. They were living in Bombay. They met each other as journalists in Bombay, got to know each other. Then suddenly they decided to get married. And the reason for their marriage was that one of them had the gas connection and the other one had a telephone connection.
As you know, our then Finance Minister Manmohan Singh in 1991 made that historic budget speech in Parliament where he said, paraphrasing Victor Hugo, that no power on earth can stop an idea whose time has come. And that idea was that of the liberalization of the Indian economy. A number of restrictions were lifted. The license permit quota Raj didn't disappear overnight.
I'm sure many of us got goosebumps after watching this. So I move to the next phase, defined by the liberalization, modernization, and globalization. So as we had discussed, the top banks, which says nationalized at that time, the lack of transparency, the lack of competition, it led to inefficiencies. Banks were making losses. It wasn't making losses, I would say, but they were directed towards flowing their funds only on the sectors which the government wanted to focus on. The interest rate structures was quite complex. With the RBI, they were managing hundreds of interest rates. Today, primarily, they handle the repo rate, and banks are free to decide on their own lending rates. Whatever happened that time, the opposite is happening now. There are talks to privatize the banks. The banks have already got privatized, but even some public sector banks are getting privatized. Then we have the airports getting privatized by 2025. The recent public issue of LIC. It's all moving in the direction. Tata Airlines, which was acquired by the government, Air India was making losses of 20 crores per day. The operating cost also far exceeded the industry average. The quality of services was poor. And then the government handed it back to Tata, and the Maharaja is back. This is quite interesting. We'll relate to it. Stock market controller that time. Prior to SEBI, we had the Capital Controller of India that used to decide on the pricing of IPOs. Companies didn't have any free hand in deciding the prices along with their investment bankers like we have today. I'll give you the best example would be Infosys. Infosys in 1990, they had approached the CCI for listing. But CCI, thinking that it was a software company, it was new. I think they didn't quite understand what it meant for the economy. They valued it at just 11 rupees. Infosys had belief in its business. It chose to wait. And by 1993, when CCI got abolished because of liberalization and SEBI came into being, Infosys, the issue price was 95 and it got listed at 145. Today, it's trading at around 1,500 rupees even after numerous splits and bonuses. I would relate it to the new age companies that got listed. Most of them were listed at hefty premiums. But if they would have approached the CCI that time, CCI may have, they would have maybe valued it at par, at their face value. So after the CCI got abolished, so when the new age companies, I would say, so the CCI got abolished and new age companies, they got listed last year at hefty premium. What I'm trying to say that new age companies, I'm not saying that they will either be failures or successes. But if you're in the equity market, you have to take some risk because these new age companies are a bit risky because of the uncertainty of the future. So allocate a small portion, 5 to 10% in these new age companies. You may never know, they may become the next Infosys. That time for entertainment, we just had Doordarshan. But after liberalization, we had so many channels. Today, on modernization, we have shifted to online content streaming platforms like Netflix, Amazon, Hotstar. That time, there was only Ambassador. Monopoly was restricted to a few car companies. Today, we are shifting to electric vehicles. So earlier, an Indian, if they wanted to become an entrepreneur, even dreaming about becoming one was a challenge because of the red tape that existed that time. But today, the government has laid a red carpet for the entrepreneurs by rolling out initiatives like Startup India, Make in India, PLI, liberalization of the FDI, and many more such schemes. So we move to the decade going forward, the disruption-led era. If you see India 2032, I'm going to talk about India 2032, but before that, I would say the journey which started during liberalization, the result is showing now. The world has realized that India is a country where both the demand in terms of consumption and supply in terms of exports, both are strong. The last decade gone by was a slow growth period, starting with the 2008 global financial crisis. And then we had the scams, coal scam, 2G scam. After that, the new government ushered in and brought in a bunch of new reforms, which was disruptive in the short term, but they were actually corrective actions taken. Demonetization followed by the GST within 6 months of time frame. After that, we had the IBC code. That time, the banks, most of the banks, even the profit-making banks, they were making losses. There were high NPAs. But that was all in the short term. Today, we are sitting on a clean, robust balance sheet. We are sitting on clean banking system, and the balance sheet are also clean and robust. This shows the chart which depicts every decade starting from 1980s. If you see in the 80s decade, India was out of the box. In 1990, again it was out of the box, 2000 also. But it was at the 9th position in 2010 decade, when India became a 1 trillion economy for the first time in 2007. It moved few notches above, and it reached 6th position. By 2032, we envision that India will be in the top 3. So we have seen where India is currently now at the 6th position. Sometimes at 5th, sometimes at 6th. It's because of the currency difference. It's just marginally lower or higher than United Kingdom. We will see what further actions are taken by the government where we can reach this spot. So I would like to show what a GDP I'm sure everyone knows, but my explanation, it consists of consumption, investments, exports and imports. That's it. Under consumption, we have favorable demographic dividend, rising literacy rates, and increasing consumerism, which will lead to higher consumption and reflect in the economic growth. The investments by both private and government, the exports, the reforms that are taken will benefit both the exports and imports. Productivity is not in the original definition of GDP, but it will be a big catalyst of change. It will rewrite India's roadmap to economic growth. During COVID, our GDP was down because the consumption was low, exports was hit, imports were low. So our GDP was hit because of that. But in this decade, for the first time, all the cylinders will be firing at once, and that will lead to fireworks in the economic growth. So starting with the first engine of growth, consumption. If we talk about consumerism, prior to 1990s, a typical consumer, they had very limited choices. Because of low income, low purchasing power, there was low import restrictions, traditional buying methods. By traditional buying methods, I would say that their focus was mainly on food, clothing, shelter, and education. Today, we have become aspirational. A person with a bicycle moving to two-wheeler, two-wheeler person is moving to four-wheeler. The per capita income is around $1,850. So we have the resources to upgrade our lifestyle. Urban households will grow at a faster rate than rural households because of the growing urbanization. If you look at this chart, it shows the strugglers, which was at 44%, less than 1.5 lakhs. It will go down by 18% by the time we reach 2025. So there will be more discretionary income to upgrade our lifestyle. On literacy rate, education is the tool for the future growth of any economy. The literacy rates have increased, the gender gap has come down. But still, we are way below the world average of 86%. The government has initiated various reforms so that we reach 100% literacy by 2032. Human power is real asset. As per the United Nations, India will be the most populous country by 2030, surpassing that of China because of its high fertility rate. So the question I want to pose here is population a boon or a bane for an economy? I would say a bane, but that's for a country which has an aging population. The notable example would be Japan, which has an aging population of around 28% share in their total population. India is fortunate in that sense. It has a young working population where the median age is lower and is projected to be lower than China and US going forward too. Today, we have got the highest youth. They are more productive, smart, intelligent, hardworking. English speaking in this global economy, we can't underestimate the importance of English language. This slide shows that more than 50% are in the working population age group. The 80%, the startup founders, which have been so many in this last decade, or most of them have been around less than 30 years of age. Most of them are young. So even when it comes to investing, I'm sure highest weightage is given to management. So human power is the real asset. On the second engine of growth, which is investment, PLI scheme, it was first introduced during COVID, when India was suffering from supply issues of key raw materials required to produce its goods. So it started with the APIs as the focus product. But today, it's moved to around 15 sectors with a total outlay of rupees 3 lakh crore. PLI has paved the way for an Atmanirbhar Bharat. The mantra is simple over here: expand the capacity to expand the economy. The stage has been set for private sector revival. The most important benefit for this would be import substitution with China Plus One strategy, Then there would be more employment generation, there would be infra boom, more FDI investments, which is all important to take India to the top 3. This shows the 15 sectors, but I would focus on the top 4, which has around 60% of the total outlay share. Starting with semiconductor, the highest outlays towards, everyone knows the shortage of semiconductor has led to major production delays in auto and electronic production manufacturing. India wants to be the leading manufacturer of semiconductor, and even going forward, it will be very important because of the reliance on semiconductor. It will be used in auto, smartphones, it's used in all these critical, they are a critical component. Electronics, auto, solar modules, PLI scheme is all oriented towards serving our futuristic needs. 30,88,000, that will be the job creation opportunities. And even the projected increase, the original outlay, it's projected to increase going forward. On infra capex, the capex to GDP ratio is increasing since the last 3 to 4 years. In this year's budget, the government announced a 7.5 trillion rupees for building the capex. The infrastructure development is very important to improve the connectivity. The highest share is gone towards railways, roads which is 25%, which will comprise of highways, expressways, railways which will have more of rolling stock, new construction line, and even defense which is 20%. GST collection. In the first month of GST collection, it was just around 90,000 crore. Last month, we touched around 1,70,000 crore, which was quite a significant growth from the first collection. Around 25 to 30% only has shifted to GST because of the cumbersome tax issues in GST. No one wants to move to online marketplace. So there will be more scope of the GST collection going forward as more and more MSCs, they transition to GST. This is an interesting slide. It shows post-independence, the income tax rates. I know your eyes are fixed on that number in 1970 to 71, which is quite a mind-boggling number of 93.5%, meaning if you're earning 100 rupees, it's just 7 rupees going in your pocket. This was, of course, on the highest tax slab, but it's quite discouraging for people to earn more and more income. But what happened, if you correlate to this chart, 1970-71, the collection was just 2,800 crore. I mean, factoring the inflation, but if you look downwards, corporate tax share was just 13%, income tax share was just 4%. Now it's come down to around 30%. Our tax base has increased. The income tax collection is now 36%. It has increased 6,000 times over 50 years. So more tax collection will lead to economic growth going forward. The next engine of growth, export. Gati Shakti. Gati Shakti is part of the infra spend over the next 5 years. India wants to realize the full potential of its exports. So it's building on its infrastructure, ports, airports, storage, logistics, and it's further going to get developed by the Gati Shakti. Kiwi, everyone knows, it's the national fruit of New Zealand. New Zealand has a robust infrastructure in place. and it exports kiwi of around $2 billion. Its GDP is $200 billion. That means it contributes 1% to their GDP, which is quite significant. On the other hand, India, we are the largest exporter of mangoes, but we just export $60 million of mangoes. Why can't we be the largest exporter of mangoes? Why is Mexico the largest exporter of mangoes? Because of these infrastructure issues. They get rotten and there's no proper storage. Once this Gati Shakti comes in place, I'm sure we'll be the largest exporter of mangoes going forward. Pharma industry. Today, pharma industry is the factory of the world pharma. The highest number of vaccines is produced in India. The world has realized that we can rely on Indian pharma products. It is also one of the largest Forex earning industry. If you see this chart, currently we are at 42 billion. We will move to 130 billion, majorly because of the PLI schemes as we discussed. Even the China Plus One could play out very well. On APIs, China exports around 30 billion worth of APIs. India just exports around 4 billion of APIs. If even 13% of China exports decline, because as countries are diversifying from China, our growth will be double, 4 billion to 8 billion. On IT industry, I would ask you how many people today are employed by the IT industry? Roughly around 50 lakh. IT industry services 50% of the world market. Today, the world cannot think of digitalization without India. If I give a reference to Saudi Arabia, oil exports is also around $180 billion. But we do not have the natural resources, but we have the creative ability to go to $900 billion. Saudi Arabia won't reach to that level. Everyone knows about Saudi, no one knows about IT industry. On Forex reserves, there has been a consistent increase. That time, during license Raj liberalization, we did not have Forex reserves. We had to sell our gold. We had to mortgage our gold. But today, we are the fourth largest in the world with Forex reserves of around 600 billion. The Forex reserves has increased substantially from 1991 after liberalization. Today, we are in the top 4. So FDI inflows has increased because of simplification of laws, ease of doing business. Tax rates are at par with the friendly nations. But there are hiccups like the dividend tax, the capital gains tax. If that gets corrected, then we will attract more foreign investment. On imports, Indian import bill, the share is skewed towards crude oil, which is around 1/3 of the import bill. After that comes electronics also, which is around 10%. So as we move towards green energy, EV marketing, China's share of EV is around 14%. India's share is negligible. So as we move towards green energy, our crude oil imports will reduce substantially, which will lead to surplus Forex reserves. The PLI scheme, already companies are setting up their electronic goods and semiconductor plants. That will also reduce the imports. So we will have surplus Forex reserves. Because of battery usage, we will be using more of EV cars, then rural consumption will increase, we will use more of gadgets. So our power consumption will go up tremendously. But that doesn't mean we will compromise on our environment. If you look at that, the thermal energy will reduce by 2030, while the share of renewables will increase. We will have a clean India. Defense. India used to import 62% of its defense equipments from Russia in 1991. We have brought it down to 46%, but still we are quite high. We can't compromise on our sovereignty and security and depend on other countries. So, as I showed in the infra capex, that the defense share is around 20% this time in the budget. So it has been increasing and we will become Atmanirbhar in defense. So I will take a quick break from here, and so that I will be more productive in my next session. The next session will be taken by Jaspreet. Over to you, sir.
Thanks, Lisa, for that. So my takeaways from the last 45 minutes, India IT export almost $200 billion, equivalent to Saudi Arabia's oil export. Can they become $900 billion, 5x in the next decade? Probably not. Our Indian IT industry will become a $900 billion, 5x in the next decade. Second, the API export, right? Even if China reduces their API export by 13%, we can double our API export from $4 billion to $8 billion. And lastly, coming to fruits, why can't we become as big as our mangoes become as big as a New Zealand's kiwi, right? We have the Gati Shakti plan in place. In a couple of years from now, probably we'll be exporting almost equivalent to what New Zealand is exporting in terms of kiwis. Moving on to element which we have put in the GDP, which is very important, which is probably get more importance. It'll get valued over the next decade. Is what we call as productivity, and we'll delve deeper and we'll try have a little engagement there. Okay, so this is the current penetration of the various product services. In two-wheelers, EV, we are hardly anything today. Probably 1 out of 100, maybe even if I take a sample here, maybe 5 out of 100 would have an electronic EV vehicle in a two-wheelers, and maybe something similar would be in a four-wheeler. And you go down the smaller cities, it would reduce further. Therefore, the average, on an all India basis would come down to 1%. Fast forward to 2031. Now, this is a number which was debated extensively, and in fact, I also debated extensively with one of my relatives who owns a couple of two-wheeler showrooms. He's the largest in Kanpur in terms of the Honda. And when I told him probably 3 years from now, every third vehicle you'll be selling is an EV, and he was startled. But that's the pace at which EVs are moving. What's lacking is only the infrastructure, which obviously the giants like Tata Power and government are collaborating to come ahead and put that infrastructure in place. Internet users, 73 crore usage today against a population of 136. But then again, you remove the below poverty line and the kids, right? And we are almost there. This is expected to move on a higher base, where the poverty line, we improve in terms of the poverty benchmarks, the literacy rate, even further down, right, where the connectivity improves. You're going to be touching 133 crores internet usage. Smartphone penetration, we are almost at 60%. So that jump you see from 0 to 60, it's actually taken, even if you start a decade back, it was hardly 20%. But we're going to be touching almost 90% in the decade from now. And A-travelers, again, a big jump. A-travelers, again, is a important matrix, because if you see a bus, the usage of a bus or a railways, it's almost saturated, right? There are people who have been using it and they continue to use it. A-travel is something that has seen a multiplier in the last decade, right? And we think it's going to have something similar over the next decade. You see almost a 3x, more than a 3x jump there. Yeah, so this is something where I would, if I may ask from the audience, when was the last time, or let's say how many times have you visited a bank, let's say in the last 12 months? So just a number, how many times you visited a bank, a branch in the last 12 months? So zero is, I mean, एक दो तो बोल दो, मतलब कुछ तो. Let's have some, kuch to, for some purpose you would end up going to a bank, right? 1, 2, what's the max? 4, right? That is what is productivity, that is what is cashless India, right? What I mean by that is, and this is not true, bank, I'm just giving you one example, but because of digitalization, right, because of COVID, right, because of productivity, the fact that we don't need to go to a bank, right, and therefore we have all that additional time in our hands to be for available, for more productive resources like, it could be recreation, spending with family, spending more time in office, etc., right? Similarly, the bank officials also get that bandwidth to focus on their growth, right? An ICICI Bank and an Axis Bank and a Kotak Bank haven't, been a 10x without the help of, the digital mode. And lastly, it also generates employment, right? Because the digital assets that you create, our own, the digital bandwidth resources we have created at R&R over the last 6-7 years, that is helping us move to the next level. Similarly, it's happening so that also generates employment is the third point I was making there. Cashless India, in terms of you look at the digital number, it's almost at 40% today, and moving up to 60% over the next 5 years, and probably by 2032 it would be probably 80%. The blue would be almost taking a larger chunk of that 2032 bar over there. And the value of digital payments, the multiplier is I mean, it's almost 20x from the base of 2020 to 2030. So that's the pace at which the cashless transactions are moving and the impact on economy. Okay, this is something that Lisa mentioned about half an hour back, and about the new age companies rewriting India's economic roadmap, the platform companies, etc. And we'll see through some examples how it's making an impact on the larger ecosystem. Yeah, before we come to that, this is just a glimpse of how the generations have moved from the Mr. Tata, Mr. Murthy and Premji, who've established their businesses in the 40s and 50s, to maybe the way Mr. Mukesh Ambani, he did it and he's still doing it, he and his father in the late 60s and 70s, to where 70s, 80s it was dominated by the global, the Indians occupying the Microsoft and Google's Satya Nadella and Sundar, and now 90s, between 90s, 2000 and 2010, the last 2 decades, is the new Gen Y millennials who are occupying the new gen, or the entrepreneurial journey. Yeah, this is just a glimpse of the new companies which have come out and gaining traction and have become a unicorn and a multi-unicorn in that sense, and a decacorn. This is an interesting slide. What we wanted to highlight is you look at all these companies on the left, the year they were founded, right? And it's all done in that between 2000, as early as 2007 and the last 2018. Almost all of them started when they were less than 30 years, right? And today, obviously, they are between 40 and 44. The larger point is that with the global education, the global exposure they got, and the connection with the new India, right, which is the Gen Y and millennials, was probably possible for them to establish a platform and take it to a level where it is today, right? A Swiggy or a Oyo or a Grofers, even a Zerodha, Byju's, right? They are all relevant today because they understood where the next 10 years are headed, 20 years are headed, not even 10 years, right? So it's important to understand, get that connection with the new India, right? 32 years median age, Lisa mentioned. China at 39 and US at 46, we have that advantage. and nobody's going to take that advantage away from India over the next decade. Therefore, it becomes very, very important to connect with the new India, which is where the median age is 32. Moving on to Sensex, how just trying to give a glimpse of what happened in 91 when the economic liberalization reforms were introduced. We had a big jump, and post that how the constituents of Sensex have behaved, have shaped up in the last 4 decades. So in 1986, you saw materials occupying a big chunk, almost 10% weightage, and materials here refers to cement and metal stocks, and today they are not even, and this is still 16, the latest if you see, it's not even about 6 or 7%. The next big chunk was occupied by staples, consumer staples, FMCG. That narrowed, but that narrowed almost half, and today it's again less than 10%. And this was also demonstrated, exemplified by one of the slides that Manish showed. The thick red bar, industrials, right? The BHELs and the Cummins of the world, that has also narrowed significantly. Interestingly, what has gone up at the same time is financials, the dark green, which didn't exist. You see that dot, and that has expanded, and financials has become, and that's where the 91 reforms and etc. India opened up. We had more banks. Kotak opened. There were 3 or 4 banks which opened in like early 2000, including Kotak Bank. That's where financials flourished, right? So again, trying to give a glimpse how the constituent changes, and that's where and this is we've taken Sensex because it has a history. Nifty doesn't have that much a history. Next. Yeah. So again, showing the constituents of Sensex over the last 4 decades. Yeah. What you see on the right hand side, absolute right, are the 30 stocks today, and you look at the ones which are shaded, about 7 of them, only those were common in 1991. Only 7 stocks, right? So from this decade to the next decade, 12 stocks remained common. From there to the decade after, 2011, about 9, and the last decade only about 7. That's the shift which has happened in Sensex, and obviously something similar would have happened in Nifty as well. The larger point, and you look at the names here, right? Some of the names which are no longer, we wouldn't have bought those stocks in the last decade. Something like a Zenith Steel and Pipes, and a Premier Limited, a Philips, a Mukund, right? Aditya Birla, it's now merged. Futura Polyesters, so many Gujarat State Fertilizer, GE Shipping, right? A C8, Bombay Dyeing, Ballarpur, all small caps today. That's the transition from being a mega large cap. They were obviously mega large caps then, just like those are mega large caps today, and they have been moved to a small or a mid cap today. That's the journey that some of these. Now, how many of these 7 names will continue in the next decade? You can just take a. I'm sure you'll have your favorites there. Reliance might be right up there, and I'm sure everyone will have its own names which we think could have their positioning if we were to draw something similar in December 2031. Just to some of the things that we are seeing today and would be relevant, the getting bigger, consolidation in that sense, and there are many sectors, right, where the giants have a dominant market share. Page Industries, Asian Paints, Titan, these are some of the names. Organized industry, they have a lion's share, right? And it has happened over the last few decades and will continue. That move will continue, right? That's one thing that's clearly standing out. The second is the so-called baby bell syndrome, which talks about the demerger, M&A, right? And we've seen a lot of action happening here, right? Biocon did some big acquisition recently. The 2 businesses in the multiplex industry, they collaborated, Inox and PVR. Reliance has done so many acquisitions, right? That's going to continue. That's going to continue in terms. So this is going to be one big trend over the next couple of years, which talks about demergers and M&A, strategic partnerships, right? Aditya Birla Retail has done so many acquisitions, stroke partnerships there. That's going to be a trend. And lastly, the new age companies, they're going to have their own share in the GDP as well as in the Sensex stroke Nifty. So many names we showed. Some of them have gone public. The others would go public in the next couple of years. They will, some of those, hopefully they'll also find a share in the Sensex going ahead. Yeah, that's where I stop, and Lisa will conclude on the last 2 slides.
So to conclude, given the factors that we discussed during this time, India is poised to reach on top in the top 3. The IMF has forecasted that India will touch 5 trillion by 26-27. It won't take much time to reach from 5 to 10 trillion then. Because of the economic prosperity, the business will prosper, people will prosper, and that will reflect in the stock market. So to put everything in a nutshell and to summarize all, I would say Indian population today is a young and productive population with rising literacy rates. Traditionally, Indian women were not working. Today, they form a significant percentage in the working force pie. 60% of the population, world population, is in Asia, India, Japan, China. The entire world is looking at Asia today. India is a country where both demand in terms of consumption and supply in terms of export is strong. India is a country where we have everything: minerals, food grains, agriculture, manufacturing, services. We are a dominant player in pharma and IT industry, which are the largest Forex generating industry. Today, the CEOs of the top Fortune 500 companies are of Indian origin. The best talented brain in the world are Indians. The top doctors in US, top engineers in Europe, they are all Indians. There is transparency in schemes, PLI, GST, the new industry, for new industry setup, the tax rate is just 15%. There is transparency in stock market, which was earlier rigged by the brokers. Today, more and more people are investing in equity market. In developed, the share is around 40-50%. India, it's just 5%. We are moving away from the earlier household savings, like the traditional ones, real estate and gold, and moving to equity market. So, all in all, I would say that all this will lead to India reaching great heights, and if history had to repeat itself, then no one can stop us from becoming a Sone ki Chidiya once again. Thank you. We have more coming. So,
we'll just have a small video that we have created with a lot of interest and patience, and thanks to our tech team and the production team led by Chandramani for doing that and creating a great job. So it's the way we call it, how India and hopefully somewhere in the world, and it's possible, right? It's happening as we speak. It's happening. The technology is moving that fast. How a typical day could look like in 2032. So just want to showcase in a video format, and probably you can consider that as your appetizer before we move to the lunch session. Yeah, over to that.
So get ready for a short movie.
Welcome to the year 2032 and take a ride with us as we travel into the near future. Based on facts and mega trends, we have put together a story about a typical day in 2032. It is not a vision or what we hope for, but it is a realistic image of where the world is heading. We won't need an alarm clock anymore because the new biometric chip installed in the body will send signals to our brain to gently wake us up. Windows will be interactive and smart, displaying useful information like time, date, weather, calendar, and all sorts of things. A toilet would look the same, but now it has become a smart toilet which will measure properties of urine and look for health problems. Your smart shoe will work with all the sensors and transmit data so that you can see a detailed analysis on your smartphone. It will have actuators which will tell you to turn right or left or slow down. There will be smart mirrors. They will make you some suggestions and recommendations. Bathrooms will be smarter and wastewater recycling will be common. A smart paper that responds to touch is being developed. Sheets of paper can turn into interactive displays. The smart paper will see images or text printed on it change. There will be a smart fridge. The Internet of Things or IoT will inform the stocking of our fridges and freezers. There will also be intelligent cookers to give suggestions. Customized recipes will be used by the kitchen robots that will cook food for you. The robots will help you open drawers, put things away so that it can map where everything lives in the kitchen. You will know what to eat to protect your health. Now you are off to work in your electric car. The public transport will have driverless cars. Hyperloops, which will travel free of friction and air resistance, will travel at almost the speed of sound. India is already working on a Hyperloop project in association with Virgin Hyperloop Company, where the distance covered between Mumbai and Pune will just be 25 minutes. There will be flying cars for longer journey within minutes. Uber Elevate has already built its flying taxi. We will hardly believe that we accepted congestion and traffic jam, not to mention the air pollution due to combustion engines. What were we thinking? Environmental problems will seem far away as we use only clean energy and clean production methods. Metaverse will shape the future of work. We will be in virtual workplaces interacting with the digital avatars of our real-life counterparts. Attending school would not be a drag anymore, as the immersive reality like ARs, VRs would let students learn in the experience. You will be able to control your house remotely. You will be able to open the lock of your house from a distance. In our absence, our house will be cleansed and ready by the time we reach home. When we get back home all tired, there will be robots attending to us and helping us with our chores. The architecture of our homes will be more creative. 3D printer will change the housing industry. They will drastically reduce the construction of the house. Future clothing will be able to monitor wearers' health and fitness. Sensors will be embedded in your clothes which can monitor ECG, temperature, movement and respiration. In the future, most of the activities and jobs that needed engaging people will be replaced by some technology and robotics, and so will the delivery of package itself. We will be receiving our deliveries in a matter of minutes with the help of drones, right on our doorstep. Amazon has already launched a delivery program for the same. Maps will be more immersive. Say you're planning a trip to London and want to figure out the best sites to see and places to eat. With a quick search, you can virtually soar over Westminster to see the neighborhood and stunning architecture of places like the Big Ben up close. Google has already developed the technology and it will be a common practice in the near future. So, how would our weekends look like? While in restaurants and shopping, we will be attended by robots and AIs. In the future sporting events, athletes will be geared with superhuman abilities using technology. Powered exoskeletons would be the biggest game changer in the future games. This would be great news for disabled and handicapped people as they would be able to participate in sports. Technologies like bionic eyes and telescopic lens will provide supernatural eyesight to the archers and shooters. They will be able to see faraway objects with much more clarity. Swimmers may be injected with oxygen-filled microparticles which would transform the current format of swimming into an underwater swimming competition. On smart health, smart speaker will listen to your voice and changes in your voice over a period of time to predict depression or early onset of Alzheimer's. Selfies will predict health outcomes like skin cancer. Wearable tech will be of great help if you have health issues. Wearables will also call emergency numbers and alert your doctors and others as needed. If the device senses that you are having a heart attack or stroke, you will also be able to check your health right at home. Our bed will be equipped with sensors that automatically adjust to your body's pressure points. The bed will also control temperature and will monitor stress and heart rate via sensors. Wow, that was a great day. We look forward to waking up in 2032. Good night.
Okay, so as we pause here, there's a lot of infographics we've shown. Happy to take questions around this theme. We have a couple of minutes. We are almost on time, so happy to take any questions if anyone has. In the meantime, some of the stuff or the areas we wanted to highlight was first obviously the EV penetration. Forex reserves, again, today at about almost $600 billion, we have about 8 months of cover in terms of import, right? Something between 6 and 12 is considered to be healthy. That's what most economies have. And the worst, I think, in that dire straits period, we were less than 10 days, 91. We've been around 6 and 12, or 6 and 10 more specifically. So very healthy number, and expected to almost triple again going forward. Smartphone penetration, again, very important. Per capita power, that again is a very important matrix simply because of the increasing usage of power. Tier 2, Tier 3, Tier 4 cities, villages, earlier power was not available, today it's almost there in every village household. And second is also the usage of power by individual households, because a lot of people now have access to the electronics, and they have that income, and they have that urge to spend, right? You have access, you have income, but if that urge to spend, of that, again connecting that, the new age India 30 to 40, they want to spend, right, on gadgets, on electronics. So therefore that per capita will go up. Therefore the focus on renewables going up, and the fossil fuels, coal, etc. going down. That's again a very important number there to per capita, almost at $2,000 we are at today, and expected to be at least $6,000 or more, $6,000, $7,000 per capita in the next decade. What it does is the additional $4,000, only about max for $1,000, even I'm saying max, would go into the basic needs which we have been spending, right? Our basic needs will not go up to the extent that we end up spending more than 1,000 there. So what does it leave for the balance $3,000? It opens up investment, the expense towards or expenditure towards the semi or the ultra discretionary. What is that? Retail, shopping, air travel, holiday, right? Two-wheeler, four-wheelers, houses, and related to houses, all those related building materials, right? The paints, the electricals, right? All that will open up. That's the big multiplier one will see once India, and globally it has happened. When China moved from 2,000 to 6,000, US moved from 2,000 to 6,000, the economy took a multiplier, right? Imagine we've taken all these years to come to $2,000 per capita, and next 10 years we're going to be adding $4,000, right, to reach to $6,000. The kind of growth that it will bring, and it's a multiplier effect, right? The moment you spend, it's a multiplier effect on all the industries. Our vision of getting to that number of 10 trillion, our sense is FY33, March 33, stroke calendar 32 is what our sense is. And once that is achieved, and obviously in between that, the intermediate landmark is also there of 5 trillion. And what it opens up those boundless opportunities that this conclave is the boundless opportunities that this conclave is all about, right? In the IT industry, we spoke about possibility of 5x. We don't think the oil can become 5x, given that everybody is trying to go green. Pharma industry, again, very good. Within that, the API space, where it's expected to move up from 40 to almost a 3x there. And lastly, so far we've been growing or having a good collections in terms of GST. You extrapolate that in terms of low double-digit CAGR, and we from 1.25 lakh crore average, you can easily move to, or the India can easily move to 4 lakh crore average over the next decade. The last number I think was about 1.6 lakh crore, the last month's collection. So, in totality, to summarize, this is what the new India could look like in terms of the infographics, and the video was more about how a daily life would look like. So with this I would like to summarize and say, with so much happening, right, India moving from being nowhere, as Lisa mentioned, in the top 10, the last 3 decades, we've already moved to a 9th, then a 6th, and the 3rd position is there for us to occupy in the next decade. And it's not going to be in 2032, it's going to be much earlier. It is just that we were showing in that column about where India will be. So much earlier than 2032, India will be at number 3 position, and China obviously will become number 1. But it's a position. We already have so much clout and power because of our the way we do our diplomatic relations, our financial, the way we are at $3 trillion. Imagine once we become a number 3 position in the world, that's going to have a huge benefit when it comes to trade relations, right? Today we get invited to almost every delegation stroke conference globally which happens, right? And there might be a couple of G7, we might not be there, but at number 3, there will not be any conference which is going to get completed without an Indian representative being there. So all of that has an impact, and we have seen that happening in China in the last 20 years. Between 2000 and 2020. Whatever China is today, it's all in the last 2 decades. And large part of it obviously in the last decade. And there's no reason why a large part of that why India cannot be the next China over the next decade. That's where I stop, and happy to take any questions. Yeah.
Urban, middle class and rural. Most of the population, the 10 years projections that I saw, yes, there is growth, but it's not very significant. So in terms of the
gap between urban rural, you saying?
Urban middle class. So there were some, categories there. So my question is there, how do you see this wealth gap closing? Because for discretionary, spend to go up significantly and all this wealth to be created, right. I'm sure India will even surpass 10 trillion. It will be 23, 24. I'm totally convinced about the growth story. But I'm just curious to understand, because in US and China, of course, there is also wealth gap there. But, I just want to understand how this wealth gap will close, especially in the rural areas. Because that's where the next leg of growth is going to come from.
Sure.
Yeah, so I just want to understand.
Very good question. Yeah, thanks for highlighting that. It will close. According to us, it will close, but may still not be as distributed as we would like it to be. Right? And it's true in America today. It's true in China. The top 5% almost control 90% of the economy. That's true. In terms of the wealth, and it's there in India as well, the Asia as well. So the idea is that it will get distributed. Let's say the top 5% having 95% may become the top 10% having 80%, something like that. But it's not going to still remain concentrated, right? But I would say more than the wealth, because at the end of the day, one is the real paper wealth, which is let's say by market cap, right, if listed, or otherwise if by valuation if it's unlisted. That's one way of looking at it. The other way is more, as I said, the defined by per capita, right. There I would see a much better position, right. So the lower end of the strata, which it's in fact said that India ka $2000 bhi isliye hai kyunki the top 10% is at $10,000. Right, that's also very skewed, right? The top 10%, not even 10, not top 5% is getting far higher number. That will get distributed. The real income, not the paper income. The real income at the hands of the consumer. And you see today, right? That our drivers, our maids, and whatever, their income patterns, their lifestyle is so much improved today, right? The aspiration, right? The way they talk, the way they behave, and it could be true for more metropolitan, but I'm sure even in tier 2 and tier 3 cities, it's no different, right? That accessibility is there, and they have that inclination to spend. So it will get distributed more on that side. The distribution of wealth. I think it's already started. So one slide we showed literacy rate moving up from 73 to 90% plus, right? Almost 90% over the next decade. One, the usage of the availability of internet and smartphone penetration. Two, Aadhaar cards, right? And related to the UIDA and the bank accounts, right? Today, 90% of India is or slightly around that number is getting banked, right? Who was not there in the system earlier, right? Because you have now got all those people to open a bank account. whatever subsidy was to be given or direct benefits is now getting directly into the bank accounts. So all those steps are being taken to enable that distribution of wealth. I'm not saying it's going to happen overnight. It's already, when you speak to people, a large part of that cash which was getting pilferated, right, because it was going to a ration house, and who was either taking double the money, or he was not giving the real, people to whom it was supposed to be delivered, right? Now it doesn't happen like that, right? The money goes to the bank accounts because government has made it mandatory that you need to have a bank account, and it goes directly there. And I think the other way to look at it is all through the Manrega and other schemes where a large part of the so-called population which was not working earlier, or they were otherwise available in a non-farm season to start getting the employment opportunities by pooling that and diverting towards those infrastructure creation and opportunities, and they get a good income there. I just had a hand there before I. Yes, sir.
It's a small clarification I would like to have from you with regard to the EV penetration. Now, considering the fact that the information that we get from media as well as from the government agencies, now the projection is much larger than 30%. They're obliged to accelerate those elements for the simple reason you'll have to cut back on emission.
Yeah.
Okay, you save money by not importing oil, that's another matter. But multinational agencies do have pressure on countries which are contributing to carbon emission.
Sure.
So I do not know if, I think you need to have a look at it, if I may suggest.
Sure.
Thank you.
It's a valid point. The only limiting factor here is that I want to highlight is that at the same time, this is obviously is more of a penetration, but at the same time, the usage of mass transport is going to pick up multifold. What I mean by that is metro trains, the MRTS, the buses, she mentioned about loop.
Hyperloop.
Hyperloop takes you from one city to another in like 1 hour, 2 hours, almost like at the speed of a plane. That's also going to take a lot of prominence, and we're seeing in Bombay ourselves, right? 2025, we have a lot of the new metro lines getting inaugurated. The big one, Andheri Kolaba, but we have between the next 3 or 4 years, you'll see a lot of such a mass rapid transport system also getting used. But having said that, the only limiting other point there is the infrastructure to have those the charging stations, if I may, because at the end of the day, इसमें सिर्फ एक पेट्रोल पंप से काम नहीं चलेगा कि आपने पेट्रोल पंप पे चार्जिंग स्टेशंस लगा दिए हो गया. You will need to have a lot of buildings, houses to have that in-house charging station for you to buy a vehicle. And two-wheelers is fine, right? It's more with the four-wheelers where that limitation will be, right? वो अभी आपने देखा है कि two-wheelers में कितना there's a hue and cry because of maybe 10 vehicles getting and without any disrespect, it's maybe only 10 vehicles which have got out of a million which have got caught fire or been on the wrong side, right? So there will be so-called not an opposition or the opposite lobby, but the conventional ICE vehicle will also try its best to ensure that वो एकदम से die down ना हो जाए. The Bajaj and the Hero of the world will also have their share, in terms of having the transition from an EV to.
But the last mile connectivity will still remain, no matter what infrastructure you build. The metros are not going to take you home.
Yeah, agreed, sir.
And that's exactly what it is.
Agreed. Fair point, sir. Well taken. Yes, sir.
But if we are 3 trillion and if we are going for 10 trillion, so the ratio is the same. So I don't think it is any change here.
The ratio is the same.
Same, correct. We are 3 trillion and now we are going 3 times there, 10 trillion. But this ratio is the same.
Correct. Valid point. What it does is, as I said, if you include PLI, China plus one, India becoming an export hub, manufacturing, domestic manufacturing getting a facelift. What do we import more, right? Oil, gold, electronics, right? The three. Electronics, now we are, we're going to be the next hub of electronics with so much of investments coming here. Coal and fossil fuel, again, everybody's trying to cut it down, right? By moving more towards renewables, right? Gold is something that the Nilesh Shah of the world of Kotak, and so many people have been saying that, and we have a theme which we like, financialization of savings. The next gen is not spending as much on gold, right? So the moment the imports of all these three come down, the import cover, as I said, 8 months, right? That will be 12 or 15 months with the same number. Because आपके import कम होता जा रहा है, export बढ़ता जा रहा है.
One more question on this. If this, after 2024, if the government changes, will there be any impact on all this things?
Sir, India has reached 3 trillion with so many government changes.
Okay.
तो कितने government change हो गए 3 trillion में? तो next 3 से 10 में भी और 4 government change. See, India has grown, you can write it down, India has grown with A government, B government, C government, D government, right? And we have seen 4 big parties in the last, with the Congress and a UPA and NDA, right? And NDA also with a coalition, big coalition, and maybe whatever in absolute majority. With absolute majority or no majority, India will grow. And that's been there historically. I'm not saying, I don't have any other way to prove it than the fact that last 30 years we have grown. In front of my eyes, I've seen from whatever 91 to the period she mentioned, the last 30 years, India has moved to 3. No reason why it cannot, whether this government or any other government that comes. Maybe we can just take the quick last 2 and move to lunch because the other meetings. Yeah, yes, sir, quickly.
Yeah, hello. Thank you for giving us an opportunity to ask these questions. You have provided a very beautiful rosy picture of how we vision India in 2032. You have shown us a lot of tailwinds. So I have 2 questions. What are the challenges that India faces or kind of headwinds to reach the kind of potential that is being shown? And secondly, how India plans to overcome them? Thank you.
Oh, okay, you're asking me a problem and a solution to that. A potential problem, not a problem, but a potential problem and a potential solution. Okay, headwinds, I would say, see, as Manish said, 5 trillion hona hai, right? It's about 27 or 28, or IMF says 28, F28. Our sense is it could be F27, right? 5 trillion, and likewise, the next 5, right? Now the risk is a delay of that, right? 5 to hona hai, right? 1 साल delay हो जाएगा. So we reached 3, right? We were 2 years late in achieving that, roughly 2 years, right? Almost उसमें से 2 years में से a year and a half is because of COVID. Now, if such events happen which are beyond our control, right? The recent war, right? Or let's say in between China and US were fighting under the old Trump era, right? Such events can delay that. But the milestone will be achieved. It's inevitable. That's the only risk I would say, and not to take away the fact that India में कोई event नहीं होगा, India में भी event होगा. Governments change. There is a period of 2 or 3 quarters when it takes time for the new government and come back. In the current state itself, we seeing Maharashtra, the government changed with whatever development happened in that period, which was very interesting. But it took its time to revive those projects. आज के दिन में सारे projects they are running, right? It's not that you see one project which is stalled, but it took its time to get it back to motion. So just the delay factor, I would say is a risk factor. But that is what is there. We can't do much about it except be patient. So domestic also we might have a couple of events which derails it and just a quick last one if.
Of degrowth in population, it's around 2%, and the death is also happening around 2%. So
Yeah.
I don't think it will be reaching around 148 crore or something. With the result that your PCI will go up, per capita income will go up by that 2032. So you have a much better rosy picture by that time.
So the better, आपके मुंह में घी शक्कर जितना कम होगा उतना अच्छा है.
होने लग गया है, so that's what it says.
मतलब and जिसको whoever needs a one kid and with all due respect जिसके कितने हैं उसके उतने मिल गए उसके बाद.
Getting married late, lot of people are.
It's a very valid point. It's a very valid point. The next gen is not.
Not the next gen, the current.
Even the current gen, okay. The current gen is also of the same mindset. We hear of DINK, double income, no kids. The current gen, yeah, they have. So people not getting married. That's one trend. DINK is another, and the last one is where you don't have 3 or 4. You might have max 2 or maybe even 1.
The sanctity of marriage is not the people are just living. Living together and all that.
Correct.
So that changes the concept of having a kid.
Correct.
Having a kid is
glad to have a current gen talking here, and thank you for that. Yes, sir, just a quick last one, with permission.
What is the basis of estimate for the future now next 10 years? Is it based on some mathematical modeling or estimate?
Yes,
How
sir.
is the estimates you have shown here? Is it from some data which is there, or?
So the past trends that have been there, plus some of the global and more importantly the domestic reports by the biggies, the McKinseys and the Moody's, and also let's say the big banks including RBI, what they are also projecting. So let's say we said IMF says by F28, right, and we'll reach 5 trillion. Our sense is it could be earlier, right? Again, the final obviously stamp we have done, but we've taken from multiple renowned sources.
Okay, thanks.
And also taking into account the past trend as well, right? If whether we showed, right, whether historically whether we have grown at double digit or not, for us to get that confidence ki aage, if we are showing 13%, have we at least grown at 11% or not, right? Otherwise, if we've grown at only at 7-8, there's no point trying to show a 13% compounded for the next decade. With that, I'll take a pause here. Thank you so much. You've been a great audience, and we'll move.
Thank you, Jaspreet sir and Lisa, for that wonderful session and also those wonderful questions. So as they've discussed, we've come a long way from an era of license Raj to liberalization, and then to modernization and to globalization, and now to the Gen Y and Gen Z disruption era. We've also understood the challenges and constraints we had to overcome post-independence. We also know what the future holds for our Indian economy and the reforms and actions driving it. This was indeed a beautiful session, Lisa. Thank you so much.